Hi everyone, today we're talking about preparing financial statements for a merchandising operation. Our focus is going to be on the multi-step income statement under the perpetual method, and I'm your instructor, Brandy. So let's look at a trial balance of a merchandiser under the perpetual inventory system. We've got some new accounts when compared to a service organization. We have an inventory account, which is new. This is going to show up on the balance sheet as a current asset. We have sales revenue instead of service revenue. We have sales discounts, sales returns and allowances, costs of goods sold, and those are all the new accounts that we're seeing on this trial balance. So now let's talk about how we prepare the financial statement. Remember from our previous video on financial statements, if we can find the split on the trial balance, we will know which accounts are on the income statement. So starting at sales revenue, everything from sales revenue down belongs on our income statement. The income statement that we're going to be preparing is called a multi-step income statement. And it's going to look like this. Our income statement is going to begin the same way with the three things at the top: company name, income statement, and for the year ended, and the date. We start with our revenue, just like we did before, but now we have a couple new accounts. We have sales discounts and sales returns and allowances that we need to deduct from our sales revenue. So we're going to add those up and deduct them from our sales revenue. Sales revenue minus sales discounts and sales returns and allowances is going to give us a number called net sales revenue. This gives us net sales revenue of $398,380. We're now going to take away the cost of goods sold in order to give us our gross margin. And the gross margin number represents the profit on selling the individual product before we take away any of our operating expenses. From the gross margin, we're now going to take away all of our operating expenses. We're going to take the total of the expenses and deduct them from the gross margin. And this is going to give us our income from operations number. And what goes below income from operation is other revenues and expenses. And these are things that we earn or we incur, but they're not in the ordinary course of business. So for example, this company, John's Sword Emporium, has interest revenue. This revenue is probably from money sitting in a bank account, but earning interest on money is not John's main line of business. John's main line of business is buying and selling swords, so it's not from his operations. When we add in the revenue and minus the interest expense, we're adding in $70 of other revenues and expenses. Altogether, this gives us a total net income for John's Sword Emporium of $218,450. So as you can see, the income statement now looks substantially different. And the reason that this income statement is so important is because of that gross margin number. Investors are really concerned how much profit you are earning just by buying and selling merchandise before all your other costs. For the other financial statements, the statement of owner's equity has no changes from what we were doing before when we had a service organization. For our balance sheet, we are adding in one account, and that account is our inventory. That is going to be added into the current asset category. Other than that, our balance sheet also looks exactly the same as it did before. So now that you've watched this video, you should be able to prepare a multi-step income statement. Thanks so much for watching.